Okay. I guess before we get started, we actually need to see if somebody would like to make a motion to appoint myself or someone else as the person leading today's meeting, because Marcus is not able to join us.
I'd be glad to make the motion. Okay. He's not able at all.
He may be here late.
He may be late.
So, I'm sorry, that was Gallagher and Branges making the motion for Julie Peterson to chair today's meeting, correct?
Yes.
Fantastic. I will go ahead and take roll. Director Gallagher?
Yes.
Julie Peterson?
Yes.
Maxwell Branges?
Yes.
Jessica Dixon? Yes. And Marcus Pimentel is absent. So that has been approved. We'll move forward with Julie as chair. And Julie, would you like to call us to order?
I would like to call the meeting to order.
Fantastic. And I will take roll call once again. Make sure who's here is still here. Director Gallagher? We'll take the formal roll.
Oh, yes, present.
Thank you. Julie Peterson?
Here.
Maxwell Branges?
Here.
And Jessica Dixon? Here.
Okay. Next on the agenda, is there any agenda modifications necessary?
Supplemental materials, do they need to be approved?
I do not believe so, but seeing as how we only have one board member present for the committee, we will have to skip item number 1, and we may circle back to that at the end, or not, depending on whether or not Marcus.
All right. So then, I think we are on to public matters, or public comment on matters not on the agenda. Do we have anyone online? Okay, seeing none, do we have any public comment from people in the room? Okay. Then we will move on to, are there any comments from committee members? Okay. Moving quickly, we're bypassing number 1, so we will get into item number 2, which is discussion of the financial performance for January. I have a slide deck for that. Okay, so starting off with the consolidated income statement, you will notice that we did have a loss for the month. We budgeted a loss for the month, and so we're not as far off of budget, although given that we have an annual budget that says we're going to make money, starting off obviously means we've got some pretty aggressive forecasts for the rest of the year. Generally speaking, the operating revenue was challenging this month. I think January was a month where we were still working on a lot of the backlog from the cyber attack. In December, we had accrued revenue, and then we reversed that revenue as the actual revenue got posted, and we posted, I think it was about $3.5 or $4.5 million more from December that had actually posted in January. Really, it's kind of an interesting story here, because as you look at the accounts receivable and the fact that there was a backlog and the fact that we generally do a lot more government payer business than we do commercial business, the accounts receivable right now is very heavily weighted government. So there's, a significant difference in what, on average government pays us versus commercial pays us, especially on the outpatient side where we do a significant portion of business. And so that really kind of drug down the whole expected collections on the accounts receivable. I think that's about all I'll say there. It's a bit challenging to kind of dissect. Most of the ways we did okay on expenses. You can see, about $250,000 favorable to budget on salary, wages, and benefits. Our supply expenses, we budgeted for a lot more supplies this year, but we are still trying to achieve some efficiencies, some better pricing. So you don't see as big of a variance here compared to budget, but, you know, these are significantly higher dollars than we were spending, you know, in '23. We saw that increase in '24, and we saw, you know, a little bit more for the month of January. We did have, you know, a good volume month in January, and so a lot of the larger supply expenses we saw were in the clinical area with things like implants, lab, pharmacy, and then some supplies related to repair and maintenance type activity. We're favorable in purchase services, and you know, one of the changes that's contributing, not this whole amount, but contributing to this is just that we changed vendors with our PIC lines, and that has picked up some improvement there. And then we also had some reductions in some other areas. So probably that's about all I've got to say there. It was other that I was going to comment where we look very favorable with $363,000. I believe that most of that is our QAF payment. You know, we weren't able to. We budgeted something in anticipation of QAF 9, but we have not. We don't know what that is yet. So I think that, you know, we are basically just expensing what we know right now, which is related to QAF 8, and QAF 8 will go through all of this year, but it's not as much as last year where we had a combination of QAF 7 and QAF 8 expenses. So until we see what QAF 9 delivers or is set to deliver, especially set to deliver in '25, we'll probably see this variance. Okay, next slide. So here's some of the key statistics. I think we did pretty well with 321 admissions. I think, you know, our budget was higher because we still had anticipation with some of our initiatives around the cath lab. Well, the cath lab was, actually, I take that back. That wasn't going to result in admissions because that's outpatient business. But we have budgeted for, you know, potentially some increased pediatric volume, some increased volume from Kaiser opening up in Salinas. So we didn't quite make what we had budgeted, but we were within 12 of what we budgeted, and 321 is a pretty good admission month for us. Our length of stay was lower at 3.46, so we, you know, landed with an ADC just under 36, and again, we had budgeted higher based on more admissions and a little longer length of stay. The case mix also is lower than what we budgeted. Most of our case mix budget was related to having some maybe more acute volume with some of the Kaiser business, and also we have some initiatives kind of from the behind the scenes in the HIM area around coding quality or clinical documentation improvement, and you know, the potential that we're missing opportunities with our DRGs, and so we've got an initiative in place there. And inpatient surgeries, we did 56, slightly better than budget, and on par with what we did last January. On the outpatient side, we were busy and kind of picked up where some of the things had slowed down a little bit in December. So we were favorable on the outpatient visits and the ER visits. We didn't quite make the surgery budget, and this is the one I would, you know, attribute to the cath lab not being open, because we had budgeted, you know, for about 24 procedures, in January, between the cath lab, because we're trying to spread about 480 procedures over the course of the year. And since that's been delayed, I think that speaks to most of our outpatient surgery. And, as you can see here, we did, 94 ER visits per day and 100 non-ER visits. Up from Okay, great. So, as I was saying, the outpatient visits, we are seeing a, upward trend from January of last year through January of this year. While it's had a couple of spiky months up, it's relatively flat year over year. Okay, this is deliveries, and I think this was, I cleaned up the slide, and all of a sudden it became kind of more clear to me what an upward trend we've had in deliveries. I knew it was getting a little bit stronger, but this really shows an 8-month trend, because back in June, we had done 48, and we've kind of had a nice progression up to 73. So hopeful that that trend will continue. On total surgeries, so the blue is our inpatient surgeries, and as we said most of the time last year, we had been seeing fewer than the prior year because we had been better at the determining the appropriate status and making sure that we were meeting medical necessity. But we did see, over the course of the year, a very slight trend upward. Both Januaries were at 56, but just a little bit of movement during the year. We have seen in outpatient surgeries a decline. And I think this graph really shows that from July to December, we saw a decline, and then it did come back up in January, but the overall trend was falling. Next slide. So here's payer mix for the inpatient side, and this one caused me to do a little extra review last night because I knew that what our net revenue looked like, and I knew, about the deteriorating AR, but this actually does show that for the month of January, our commercial mix was pretty strong. We had 18.7% commercial, which is, strongest that we've had since August of 24. And again, I think this makes a bit of sense when I think about how the payments have been coming in that we've got. Even though we've been having reduced payments, we were getting payments from our commercial payers because we also had an issue with our NPI number, and so our Medicare payments have been stopped up for about a month. So there's a good sized backlog in Medicare that we're still working through, and so because everything else was relatively close to normal range, of course, knowing that got it in commercial, it came out of somewhere else, and the bulk of where our decline has been is in the managed Medicare, and Medicare itself has been at about 25% the last couple months, which we're usually closer to 30%. Next slide. Outpatient wasn't as drastic. Our commercial was at 23.6, which is a good month, but we've had a number of months in that range, so that was much closer to normal. Even though when I did my AR dive, we had a month-over-month change of about $6 million in government payers and only $500,000 in commercial payers in the accounts receivable. So everything else is pretty normal to where it normally is. Again, with the Alliance being the largest bucket in the gold. And then I don't have a slide, but I did want to just give a little bit of update on the recovery efforts in general. We're trying our best to kind of track everything from the point of registering the account, to getting the charges on the account, to getting them coded, to getting the claims submitted, to getting the claims paid. So we had 1,826 accounts that were registered during that downtime period. There was about a small portion that were pre-regs, but for the most part, these were accounts, people that were seen during the downtime. The we've got charges on all of those accounts. Doesn't mean we might not come across something somewhere that, is a missing charge, but for the most part, we feel like those accounts are fully charged. We've completed coding on 99% of those accounts, and so 1,813, so only 13 accounts remain uncoded in this area. We've submitted claims on about 88% of the accounts, so about 1,600 accounts have claims submitted, and then about 54% of these accounts have actually had claims paid. Now, when I did a little deeper dive into the average, charges per account, I won't give you all the breakdowns because we broke it down between ED, inpatient, outpatient, surgeries, but the total says, we had about $27 million worth of gross charges. So far, on the claims that have been paid, it accounts for about $7.8 million of those gross charges. So there's still about $19.5 million worth of gross charges that haven't been paid on. What I noticed in looking at the claims that had paid was that the average balance per claim paid was less than the average balance of the total. So one of my outstanding questions back to the rev cycle team is, and it would make some sense that we kind of got the easy stuff out the door first, and some of the higher dollar accounts, ones that maybe had more queries or more work to code and get out the door, or even just to get paid, are kind of still lingering out there. So I did some, just rough math, because on the percentage of accounts that have been paid so far, combining inpatient and outpatient, we're only seeing about a 7.5% reimbursement rate, which, is low. Generally, before you account for things like QAF and DISH, we're in the 10 or 11% range. And so 7.5 is pretty low. But if that was to be what the rest of it paid at, we would have about another $1.4 million, $1.5 million to come in. If we get, for every percent above that, it's going to add about $200,000. So one can hope that it'll be a little bit better than 7.5 or 8.5%. But what it tells me is that from just that 3-week period, there's $1.5 million to $1.5 to $1.8 or so, two on the outset. Now, that's just that 3-week period. This whole issue, created the backlog on what came after that, because same group of people working more hours, but our backlog at one point, our discharge not final bill, was up close to $70 million. We normally would run $17, $18 million, and that would account for 5 or 6 days discharge not final bill. At one point, we were up over 20. We're currently sitting at about 34 million and almost 12 days unbilled. So we still need to cut it in half again. But there are, there's significant dollars out there. There's, these dollars, plus there's dollars just from Medicare and the MPI issue that we had that has been resolved, but they're catching up the backlog. So it's made just incoming cash from day to day just inconsistent and a little bit harder to predict. And that, of course, is impacting our cash flow. So that is all I have to report, so I can take questions.
Give a sense of how many.
Not really, because I have never looked at it from a break-even standpoint, and break-even is pretty hard in OB.
Or some other measure that's really a curiosity.
Yeah. Well, I only show on that one slide 12 months worth of, data, and so I don't have something, off the top of my head going back to when volumes were higher, but if we've looked over the last 5 years, we've seen declining, annual totals in deliveries. And, if we were getting 70 a month, we'd be getting closer, but I don't even think we'd be back where we used to be. Probably take more like 90 or something.
90-ish, yeah.
Okay,
Yeah.
that's kind of what I was looking for,
Really
some benchmark.
Payer mix dependent.
Isn't it almost all?
Yeah, so good.
My other question was about the fall, the trending fall and update surgeries.
I think, take a,
Well, December was partly was the downtime. Right.
yeah.
The months leading up to that.
Right. That's good enough answer.
Yeah,
I didn't know if there was something.
I think there's probably a couple of things here, and this is where trends are good or bad. If you look at last February, doing 150 in February is, just an anomaly. So, but that's where the graph's starting.
I got it, pull the
It's
graph
gonna
up.
pull it down.
Gotcha.
Because if you really look, other than, December, which also has the holidays in it, we were always at least above, 113, 112. Yeah. So, 122, that, we're off at most 10 from our low point during the year. And so we probably really would average, more in the 120 range. So then we're actually probably pretty close. I mean, I bet you in a couple months, assuming we kind of do what we've been doing, it'll look a lot flatter. All right. Well, if there's no further discussion on the financials, we will move forward to item number 3, which is to receive and forward to the district and the hospital corporation to approve the consolidated audit engagement letter with JWT and Associates. We've used JWT for the last 2 years and have engaged with them again to do the 2024 financial statement audit. The cost is $30,000, and we're starting to do the initial provide data and go through all the steps with the anticipation of bringing a final audit draft back to the board the end of April meeting, so that we can then have the audit done for all the various reporting covenants that require the audit within 120 to 150 days after a year.
We need a motion to approve, or?
So we
Okay.
can't.
Nor can we take one.
Got it, just mark this.
Yeah. So, any comments or questions about the audit?
My comment about the engagement, like, a lot of things I can read, but that engagement, that really puts me to sleep. So I trust that it's what you want.
Yeah, I mean, luckily, it kind of says the same thing it said last year and the year before, because it's a long engagement letter with a lot of, discussion around the things that they need to, basically the standard language that they need to have in an engagement letter. Okay, if there are no other questions, I guess we're ready for adjournment. All right, meeting adjourned.
Thank you.